Okay, so if you were watching Nvidia last week, you're probably as confused as I was. The company drops an absolute monster of an earnings report, and the stock just tanks. What in the world is going on? Let's try to make sense of it.
All right, before we get into it, just a quick disclaimer. This is all for informational purposes. It is not financial advice, and you should always do your own homework. Today's date is February 28th, 2026.
So, yeah, here's the big question, right? The earnings were incredible by pretty much any metric you can think of, but then the stock sells off hard, down about 9% in just a couple of days on huge volume. It doesn't add up on the surface.
I'm not going to make you wait until the end for the answer. Let's just get right to the bottom line of what happened.
And here it is. The drop really had almost nothing to do with how well Nvidia is doing or what its future looks like. This was all about how the market works. It was a classic textbook case of sell the news. So let's break down what that actually means.
So our first big point is that this whole situation was driven by the market itself. It wasn't some hidden problem with the company.
Sell the news is a pretty simple idea when you get down to it. You know, all this excitement builds and builds before a big announcement, and that pushes the stock price up. But once the good news is actually out, well, there are no more positive surprises to push it even higher. So the people who got in early, they cash out. They take their profits. And that's exactly what we saw happen here.
And if you look at the mechanics, it makes perfect sense. First, you just had a ton of profit taking. I mean, the stock had a crazy run-up. Second, almost every big fund on the planet already owned a lot of Nvidia, which means there weren't many new big buyers left to come in and push the price up. And third, expectations were just through the roof. They were so high that even a fantastic report wasn't enough. So what did traders do? They sold Nvidia and moved that cash into cheaper tech stocks or other things related to AI, like companies that handle power and cooling for data centers.
But it wasn't just about what was happening inside the tech world. Things happening on the world stage played a really big part in this too. And this shows you the chain reaction perfectly. You get geopolitical news about an attack in Iran, and that makes oil prices spike. When oil prices go up, everyone starts worrying about inflation again. That, in turn, makes people think interest rates are going to stay high for longer, and when that kind of fear creeps into the market, what's the first thing investors do? They dump their riskiest holdings, and that almost always means high-growth tech stocks.
Really, the lesson here is simple. It honestly doesn't matter how great a company's story is. When those big macro fears about war and oil and interest rates take over the conversation, even the strongest stocks get dragged down with everything else. Nvidia just got caught in that wider net.
Okay, but this is where the paradox comes in. Because while the market was freaking out about all these external things, the company itself has probably never been stronger. I mean, just look at the actual numbers they put up. Total revenue for the year, a mind-boggling $68.1 billion. And get this, that's a 73% increase from the year before. I mean, that kind of growth is it's almost unheard of for a company this big. And on top of all that revenue, they're incredibly profitable. Gross margins are holding steady at a massive 75%. The story behind those numbers is just as powerful. The CEO, Jensen Huang, basically confirmed the AI revolution is really just getting started. He said companies and even whole countries are in a rush to build their own AI factories, and all of them are going to be powered by Nvidia chips. And the signs of strength are just everywhere you look. Their data center business alone brought in over $62 billion. They're forecasting an even bigger next quarter at $78 billion. They gave $41 billion back to shareholders, and their brand new next-gen Blackwell chips already selling out. The business is just firing on all cylinders. So that kind of explains what just happened. But what about what's next? What are the important things to be watching from here on out? Here's a pretty good checklist. First, keep an eye on Nvidia's big GTC conference next month for news on new products. Second, watch oil prices and the VIX. That's the market's fear index, to see if things are calming down. Third, pay close attention to what Microsoft, Google, and Meta say about their spending plans, since they're Nvidia's biggest customers. Fourth, check the revenue reports from TSMC to make sure the supply chain is running smoothly. And finally, track the 10-year Treasury yield. If that starts to go down, it's usually very good news for tech stocks. And that really leaves us with the ultimate question. Was this drop in Nvidia just a healthy, maybe even necessary pullback for a stock that got way ahead of itself?
Or was it the canary in the coal mine, warning us that there's deeper trouble ahead for the entire market? That's really the billion-dollar question we're all left with.